Hey folks, welcome to the weekend technical analysis update video by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, let's get right into it, folks. First and foremost, this video covers the market's outlook for Monday, July 2nd to Friday, July 6th, 2012. Remember, this is a holiday week with Wednesday being a closed day on Wall Street. In addition, I believe Tuesday is a half day with the markets closing at 1 p.m. So just off the bat, you have to understand that the coming week is going to be probably lighter in volume. The markets ended the second quarter 2012 on a last-ditch effort on a super rally with the Dow up 278 points, S&P up 33, NASDAQ up 85. It was a great rally, all on the back of word from Europe that there might be an additional move to create a single entity financial entity that will oversee the entire Eurozone in terms of their finances. And again, it's basically a move towards the Federal Reserve. Remember, the Fed oversees all of the entire United States, all states included. And if you look at Europe in terms of now becoming states within a whole, it would be the same thing. Instead of each state controlling their own destiny, the global picture is created. The monetary policy for the whole picture is created by this one entity, and ultimately that's what they're moving towards. All right, bottom line is the markets rallied beautifully on Friday into a pivot high here, which is very important on a technical basis. The pivot high from the 19th. See this high pivot? This is right before the downward move started, where we went from 136 and change all the way down to about the 130 change level, and then we have now reversed that and we closed right at that exact pivot high. If we go to the daily chart, you can see it much clearer. There it is. There's where we ended the day. So what you're going to look for this week is, can the market close? And remember, when I say close, I mean at the end of a day at 4 p.m., is the market above this level? If it does get above this level, you could see a little further float up during the course of this week based on light volume. And just one little side note here, folks. Here at InTheMoneyStocks.com, we profit in any type of market. You can ask our members. This is what we do. We teach you proprietary signals to analyze any chart. I don't care if it's a commodity, a currency, a stock, an ETF, an actual market like the S&P. But bottom line is, there's a 7-day free trial here to the Research Center. If you're someone that is into swing trading or investing, that's where you want to be, the Research Center. It will give you multiple things to go over. It'll give you trade alerts, swing trade alerts. It'll give you nightly videos, live broadcasts that only you and other members can go to, where you can ask questions, see live charts. I mean, it's a fantastic avenue for someone who is serious about making money in any market. Now, if you're not serious, then yeah, of course it's not for you. But listen, I don't know of anyone who's not serious about trying to make money in this market, especially as wacky as this market is. If you're a day trader, intraday stock chat. 7-day free trial. Swing trader, investor, Research Center. That simple. Now, one thing I just want to go over, folks. We talk about these calls that we've made in the market, how we've been nailing the highs and lows. You know, you could go back to the pivot high in March where we had the head and shoulders pattern and we called a cycle top. And right here, again, here's your beautiful head and shoulders pattern. Right here, we noted that there was a cycle top, major cycle top beginning here that would lead to quite a bit of downside. And sure enough, that was a beautiful call. We made major money. Then ultimately down here, we went long, markets bounced, and here we've been going short and long on stocks, catching little moves up and down in the markets. And again, it's all about the charts. You know, Wall Street wants you to believe, they've brainwashed the average person to believe that it's, you know, how much money does the stock make, you know, the company make, PE ratios, revenue, blah, blah, blah. You can know all that stuff ahead of time by just reading the chart correctly, and that's what we teach you to do here. And it's amazing how just by doing that and ignoring the news, you now become a 90% winner. It doesn't matter which way the market's going, you'll be positioned 80-90% success rate trades constantly in any market condition. Whether it's your 401k or whether it's your IRA or investment account or trading account, you can literally have that type of success rate here when we teach you these methods. But again, one thing I want to note here, you know, Nick and I, my partner and I, we were short the market a week and a half, 2 weeks ago, making some money, and then Goldman Sachs came out and said, hey, we think the market's going to get crushed. And as soon as we heard that, we went the opposite way. We say, hey, if Goldman's doing that, make sure you take some off the table here of your profits on your shorts, and then position yourself with break-even stops to protect yourself, because Goldman is notoriously wrong when they say what they want to the public. Now, in my opinion, Goldman's smarter than that. They know what's going to happen. They just want the average person on the wrong side of the trade so they can make money. I mean, this is classic Wall Street action. I mean, this is why Wall Street has a bad rep. A good example of Goldman doing this in the past was in 2008 when oil was at near $150 a barrel. They said oil's going to $200 a barrel. Nick and I, my partner and I, said, guys, it's going to crater, it's going to crash. Guess who was right? Oil goes down to like $30 a barrel after that point. So obviously they were wrong there. And the other thing to mention here, when Nick and I had a cycle top here, Goldman comes out after we called our cycle top right up in this area and said, hey guys, Goldman says this is the buying time for a generation, best buying time in a generation. And sure enough, if you had bought up here, was it the best time in a generation? Well, obviously not, because right down here, in the very least, would have been a better buying opportunity. So, just reading these signals, folks, this is what we help our members do here at InTheMoneyStocks.com. The accuracy is uncanny, as you can come talk to our members, in Traders Life or wherever you want. Once you become a full-fledged member, you get access to the social network and can talk to all the other experienced traders here, investors here at InTheMoneyStocks.com. It's a great social network. But bottom line is, again, you have to go into next week expecting the markets to kind of be in that neutral zone, maybe a little bit of upside, possibly left. What we're going to be watching for is whether or not this orange line gets taken out on a closing basis. If it does, then you have the possibility to float up a little bit higher, maybe as high as upwards of here. Maybe to the 139, 140 level, at which point that's a great opportunity. It's really not that far away. It's only about 4 points away on the SPY, and on Friday we were up 3 in the third anyways. So, I mean, it's like, one more big day or maybe a compilation of 3 days where you go up $1 a piece or so would do it. At that point, I'll be shorting this market again, as we ultimately will head lower. I'll give out those trades in the research center if we get that pattern set up to be correct. Going to a couple other charts here, folks. One thing I want to show you is the dollar chart. I think the dollar is very important for us to monitor because it is a contrarian view. In other words, the markets go opposite the dollar. Whatever the dollar is doing, the markets do the opposite. So essentially, the markets trade with the euro. And what you can see here is this was our pivot low I called, and I told our members that you could go long the dollar here and short the euro, and that turned out to be a great trade all the way up. I mean, look at that mega move. And then ultimately on Friday, the dollar got crushed down to the 50. One thing to watch here is you never took out this low, so follow that just like the spiders to see if it closes above that level, the SPY. You want to follow the UUP and see if it closes below this level. If it closes below, then you have a good chance to see the dollar come down to this level, which will be your next master target buying range for the dollar. This will be a great buy for the dollar if you get there. But again, remember, if the dollar does close below this line right here, then as the dollar comes down, markets probably float up a little bit more. And that's, with a holiday, it's generally what you would expect. It really is. The volume, again, Tuesday and Thursday on either side of July 4th should be very, very light, unless some freaky news comes out of Europe where they start saying, oh, it's, the deal we had on Friday that rallied the markets isn't going to be. And if that's the case, then obviously the markets will get hit. But aside from that, that's the only scenario I see where the markets will take a beating. And that's, again, maybe a 25% chance that happens in this coming week. I just don't see it. A very small chance, at least, of that happening. Okay, so that's what we have going on there on the dollar. This is obviously support 1, support 2. Resistance would obviously be here, gap fill up here, and then resistance 2 would be double top up there. If we take a look at some other charts here, folks, let's take a look at JP Morgan. I'm a big fan of watching JP Morgan as a leading indicator. One thing that really expresses this well, if you go to your intraday JPM chart, if you look at Thursday at the low here, and by the way, I nailed this low as a day trade, but it was a great trade here. If you just take this line here, these low pivots connected through, look at that, perfect. It was a perfect low, and that's a level I played myself. But notice how this move started at 2:30 p.m. All right, so here's 1:30, here's 2, here's 2:30. At 2:30, JPM starts to rip up. All right, this is something I noted to my members in the intraday stock chat. JPM is a leading indicator, and sure enough, if you go to the SPY chart at that same time frame, the markets were actually still at their lows. So here's 230, and just as JPM's ripping up, the markets really aren't ripping up much. So JPM is leading the charge here. It was leading, and I noted this to my members that there could be something up with JPM. And then all of a sudden, JP Morgan surges, and the market surge as well, and the rest is history. Then we get this mega rally. But again, one thing that kind of bothered me on Friday, that even though I still think the markets will be kind of a neutral-ish move this week, one thing that we need to keep an eye on is JPM. JPM was down 15 cents on Friday, and that weakness should be noted when the market's up 3%, 2.5%, and JPM is negative. We just have to be a little bit more careful going into next week. So ultimately, I have a couple longs and I have a short out there, and just kind of ultimately finding the correct patterns, which, again, one of my longs is Netflix. I mean, this is just such a beautiful trade here, guys. I just want to show you guys this. My members are already in the money on this nicely, but look at this bullish pattern on top of the 20 moving average, targets the 50 MA. I mean, this is a no-brainer with so many shorts in it on Netflix, in my opinion. It should be here by next week at some point, right around the 72, 73 level on NFLX, but that's a great pattern. I mean, you get patterns like that, you have to take advantage of them, especially when it coincides with a time count. And time counts are something we teach you. It's cycle work. Very easy once you know how to do it, but we obviously don't tell it to everyone. You have to be a member here, and you have to take our webinar and so forth. But there are things like that. There's another stock, a Dendreon, DNDN, which I think is a great play going. Look at that flag pattern again. Same general pattern, possible upside to the 50 MA right here. Look at that sideways consolidation above the 20. It's a beautiful thing. Amylin got bought out on Friday after the bell by AMLN by Squibb, Bristol Myers. So that actually could help Dendreon. Dendreon is one of those stocks that kind of trades in its own world. When a biotech of about the same value gets bought out for a big premium, it tends to make a move up. So it'll be interesting to see if this gets any play on Monday. The buyout wasn't a huge premium to Amylin where it was currently trading, but nonetheless, it did get a nice little buyout premium. I think it was about a 15-20% premium, somewhere in that range. It wasn't huge, but it was decent. All right. What else do we want to talk about? In terms of looking at possibilities on shorts, I think I want to just quickly cover Apple here. This is a trend line here that you're still below. So technically speaking, as long as you don't get above this on Apple, Apple could float up a little bit more this week. What you want to see is Apple technically to me is a short as long as you do not get above this area right here. See this trend line here? So you broke through it. And now, because of Friday's mega rally, you bounced. Now the question is, do you get through this level? If it gets through, then it could continue up very nicely. If it can't get through, it's going to come down. And one thing to watch also is, not next week, but I believe the following week, Apple has earnings as well. So that'll be a big, big indicator, obviously. I don't play earnings. It's not a wise thing to play earnings, but obviously you'll probably get a big move on Apple into that. Looking at other stocks, obviously Research in Motion took a monster hit of almost 20% on Friday based on the earnings, and that stock again just continues to get decimated. The stock was so low already, you really had to do poorly. They really had to do poorly on earnings to see it go lower, and they did. What do you say? I don't know. I wouldn't go near it at this point. I think maybe if it gets to $5, you take a shot at it as an option play. You pay $5 for an option type thing on a couple thousand shares and see if it gets bought out at some point. But at this point, they keep on fumbling the ball, and there's so far no sign of any sort of turnaround there. No sign. I mean, they just keep on fumbling and fumbling and fumbling. All right, other stocks to look at here. Exxon, what a monster move here. This stock has just been a wild trader. One thing on Exxon that's slightly bullish, we'll see if it continues to hold this. It did close above this previous high. To me, my next shorting opportunity will probably be somewhere up here. If it goes straight up into this area, right up here, and you also have a pivot double top, you could even make a case you draw this line. Somewhere in this vicinity up here will be a ton of resistance on Exxon, which is something I will be paying close attention to, especially if it comes later in the week towards the end of the July 4th holiday week. Remember, that week is, if the market can float up that week, it's a great thing because it'll set us up for possible shorts in the future once volume returns to this market following that week, if that's the case. Okay? On that note, folks, again, I just want to remind you a 7-day free trial here at InTheMoneyStocks.com. Come discover what thousands have already discovered and are using to profit in every type of market, whether the market's going up or down. They're profiting on the methodology by putting it to use and trading or swing trading or investing stocks based off of this. We will teach it here. I'm a big believer in teaching members how to fish, not just giving them fish. Now, I give them fish too based on my swing trades. When I take a swing trade, I publish it live, just with the timestamp, everything, stops, targets, all in there. But I also want every member here to get everything out of it they can. I want them to understand why. Why are you taking a trade here? Why are you doing this? Do it for yourself now. Go find tons of other stocks. Become a community of the elite here, and that's what we try to get people to do, and that's what we have done. So, again, come to InTheMoneyStocks.com, profit with the pros, learn the proprietary methodology. I'm here to help, I'm here to teach, and I'm here to help you profit. Take care.